It is 9:09 a.m. Pacific Daylight Time. It is the second day of September 2025, and this is episode 1159 of Bitcoin. And, well, some people sold their Bitcoin over the weekend. I don't know. I guess they were needing to go buy $75 frickin' briskets at Costco because that's what they cost now. I mean, brisket. You're talking about a piece of meat that, unless it's cooked for something like 10 to 14 hours, is not a good piece of meat. And it's $75 for a decent-sized brisket. It's insane. Meat prices are skyrocketing. The herd, the United States, actually the world herd of cattle, is at an all-time low since records have been kept as to how much we think there's cattle, how much cattle we think that there is crawling around and eating grass and pooping and peeing. Ever since records have been kept, the amount of cattle on this planet has never been this low. And you know me, I'm a soil nerd, so soil around the globe is suffering because of it. But again, getting back to the news at hand, we did see a lot of selling over the weekend. I got a story about that. And then, yes, we're going to talk about Bitcoin treasury companies because Metaplanet made an announcement at the Bitcoin Asia conference over in Hong Kong. And it's actually a little bit more important than we thought. And then, of course, we're going to talk a little bit about strategy, a couple of times, in fact, and then quantum threats and El Salvador. El Salvador and you and quantum threats. There's an issue going on. I didn't even see this. Of course, I too was more concerned with listening to the Tech football game. Saturday, it was the first game of their season. Finding out that I'm no longer able to just simply stream a local radio station over the internet from Lubbock to listen to the game. Now I've got to, I guess it's going to be this way all season. We'll have to see, but we had to get a $10 a month subscription to ESPN just to listen to the game on the radio. I don't even watch the Tech games. I like listening to the radio because my two favorite announcers, it's the voice of the Red Raiders, man. It's the voice. It's a nostalgia that you just can't escape from. That's why I don't even watch Texas Tech football on TV. I just listen to the game, and it relocates me right back to Lubbock, where I spent some of the best years of my life, man. I mean, and I got to pay $10 a month for it. I can't even stream it. It's the enshittification of everything, guys. Cattle herds low. I got to pay for radio. It's just, we're all gonna be in hell. No, not really. We all have hope because of Bitcoin, but University of Hong Kong, their business school, they like Bitcoin too. I'll tell you about it. And then Gavin Newsome going head to head with his own meme coin against Trump, as if there wasn't something better to spend your time on in the state of California. But first, let's get back to Bitcoin long-term hodlers spend 97,000 Bitcoin in the largest one-day move of this year, 2025. Amkar Godboll, tell us all about it, brother. And he's doing it from CoinDesk. Long-term Bitcoin holders have stepped up their liquidations in recent weeks, adding to bearish pressures in the market. And on Friday alone, these so-called patient holders offloaded 97,000 Bitcoin, which is about $3 billion worth, marking the largest single day long-term holder sell-off of the year, which accounts for the bulk of the recent increase in spending activity, according to Glassnode, blockchain analytics firm. The 14-day moving average of coins spent by long-term holders has jumped to nearly 25,000 BTC, the highest since January. And Glassnode defines long-term holders as those with a history of owning coins for over 155 days. Bitcoin's price fell by over 3.7% to $108,000 on Friday. Note that the profit-taking operation is still noticeably slower than the spikes we observed in late last year, 2024. Long-term holders, including wallets that have been dormant for years, have been consistently selling since Bitcoin broke above 100K earlier this year. And one explanation for this profit taking can be rooted in investor psychology. Think of it this way. How many assets in the world trade at $100,000 US per piece? Perhaps very few that you can quickly count on your fingers. Therefore, it is logical for investors to feel that $100,000 per Bitcoin is just too expensive, prompting them to take profit. Profit. It also means that the market will likely take time to adjust to 100K as the new normal for Bitcoin. We could continue to see broad range trading around the six-figure price mark for some time, allowing investors to acclimatize to this elevated valuation. All that means is chop solidation, as I think it's Willy Woo in the space. He's one of the traders in Bitcoin, and he goes on podcasts, and I think it's him that has coined the term chop solidation, where we're in consolidation mode, but it's really choppy. There's a lot of short range volatility as we move sideways, and traders love volatility, man. I don't know how they manage it because I'm not a trader myself, but it sounds a lot like you're trying to compress buy low and sell high and be able to time those peaks and troughs perfectly, except instead of on the macro scale, like on an hour over hour, afternoon versus morning scale. And if you thought it was bad trying to time the top and the bottom on a month over month basis, try day trading this stuff and watch your wealth evaporate like water in West Texas in July. Meanwhile, Metaplanet's president lays out a plan to acquire 210,000 Bitcoin by 2027 at a shareholders meeting. This is out of Bitcoin Magazine, and our good friend Frank Corva is writing it. On September 1st, 2025, Metaplanet hosted an EMG in the heart of Tokyo. So this wasn't in Hong Kong. Okay, this is a completely different event. And at that event, Metaplanet's president, Simon Gurovich, highlighted the success the company has had in its 16 months operating as a Bitcoin treasury company and laid out the company's plan for acquiring 210,000 Bitcoin. This vision includes issuing 2 versions of a brand spanking new financial product, Metaplanet Perfs or Prefs, perpetual preferred stock offerings that resemble the type that Strategy rolled out in March of 2025 in efforts to acquire said Bitcoin. Let's pause. Let's go back in time. Back in time to when Strategy was still called MicroStrategy. The company led and is still being led by Michael Saylor. He is the one that came up with the quote-unquote Bitcoin Treasury playbook. He was selling common stock for a long time to be able to fund the Bitcoin purchases. Plus, he had a bunch of cash on hand already. Well, he burned through that pretty quick. And then he just started diluting existing shareholders by generating, or rather printing, new shares of MicroStrategy stock. And the proceeds from those stock sales did 2 things. First, it diluted the value of the existing shareholders, which doesn't make anybody very happy. And it also generated a lot of income. A lot of cash was given to Michael Saylor, which they immediately spent on buying more Bitcoin. I think Mike sensed that train was about to come to the end of its tracks, and he started coming up with preferred stocks like Strike and Strife, and he's got at least 2 others, if not 3. And he was selling those. Now, that way, he was able to still print shares and not dilute the existing shareholders because it was a brand new product. He's simply just building his own yield curve. He's issuing bonds like the United States government or any sovereign government already does. He's just doing what sovereign governments do. He's just doing it at the private scale. And I can't believe it, but it's apparently not illegal to do that shit. And I'm really surprised that Mike was the first one to go, hey, this isn't illegal. We can do this all day and twice on Sunday. And that's exactly what they did. And now, as far as I can tell, Metaplanet's the first company in the Bitcoin line of treasury companies to start doing that part of the playbook. As in, I would call it phase 2 of the playbook. Phase 1 is burn all your cash, buy Bitcoin. Phase 1B is to start printing new common stock and use the money, the proceeds from those sales to buy more Bitcoin. But now you hit the end of the tracks and you got to come up with something new. So now we end up in phase 2, where you just start creating financial products, assign a dollar value to them, and print the living crap out of them and hope people buy them so that you can buy more Bitcoin. Okay, so let's continue. Gurevich commenced the meeting by explaining how Metaplanet pivoted from operating as a, remember, struggling hotel company to a Bitcoin treasury company in early 2024. Since then, he pointed out, Metaplanet has acquired approximately 0.1% of the total Bitcoin supply, far surpassing its initial goal of acquiring a mere 10,000 Bitcoin. And during the event, Gurevich also announced that Metaplanet had increased its holdings to 20,000 Bitcoin, giving it the 6th largest Bitcoin balance sheet in the world. He added that his goal is for Metaplanet to have the 2nd largest Bitcoin balance, second only to Strategy, that is, and he compared Metaplanet's percentage of Bitcoin per share over the past year to Strategy's, noting that it's increased its percentage to 2,274% as compared to Strategy's little piddly 86%. Oh, man. Gurevich also pointed out that Metaplanet stock trades over 100 hours per week via exchanges and brokerages worldwide, helping to make the success of Metaplanet not just a Japanese story, no, but a global one. Quote, wherever you are in the world, Metaplanet is within reach, Gurevich told the event's 3,000 attendees. 3,000 people came to the Metaplanet event. Holy smokes. Traditionally, preferred equity has been in a quiet corner of finance, but backed by Bitcoin, it's something entirely new, Gurevich said. He explained how the preferred equity Metaplanet plans to offer will not only become a major fundraising mechanism to acquire more Bitcoin, much like it has for Strategy, but that it will also establish a Bitcoin-backed yield curve. Yay, here we go. One with the potential to produce greater returns than those from fixed income products in Japan, and what is more. Gurevich highlighted the fact that Metaplanet is in a unique situation to create such a product in that it can borrow at extremely low rates, as Japan currently has the lowest interest rates of all G7 countries. Quote, low rates in Japan are hold on, I'm sorry, I'm laughing. Low rates in Japan are our hidden superpower. Pausing to say, yeah, at the expense of the citizenry of Japan, but because we know what look, everybody in the United States wants interest rates to come down so they get cheap money so that we can go out and buy risky assets, that house, that car, whatever, right? But if you keep those interest rates too low, you end up, well, with a whole bunch of brand new money that, just like Strategy shareholders, dilutes the value of the people already holding dollars. And it's no different in Japan. Just because they're in the Pacific Rim and we're over here on the other side of the world does not mean that money and yield curve and printing and low interest rates don't have the exact same effect, and they do. Continuing, he also shared that traditional fixed income markets are under strain and that investors are searching for alternatives. You spelled running for the exits wrong, but okay. This, according to Gurevich, is an opportunity to become the largest issuer of Bitcoin-backed fixed income in Asia, and he believes that the types of preferred equity Metaplanet plans to offer will serve as an enticing alternative to traditional fixed income products. Metaplanet plans to offer 2 classes of preferred equity. Class A will be designed as safer and steadier of a financial product that offers a yield, much like traditional fixed income products do. The product will yield, in fact, 5%. Hey, that's not bad. At least it's not double digits. Class B, however, will be a bit riskier, but will also come with the option to be converted into Metaplanet's common stock. Oh, I'm going to have to mark that. We got to come back to that. These new financial products will offer Metaplanet 4 distinct advantages, stated Gurevich. 1, diversification and financing. 2, permanence. 3, low cost of financing. 4, ability to cap preferred share issuance. After discussing these 4 advantages, Gurevich summarized his presentation with a revised mission statement for Metaplanet. Pioneer a new theory of credit in Japan, issue instruments built upon over-collateralized, absolutely scarce digital capital. After the laying out of the plan for Metaplanet's prefs, Gurevich asked the attendees if they'd approve of the company seeking to amend the Articles of Incorporation, and he was met with a resounding round of applause. They loved it. They absolutely loved it. And the members of the audience weren't the only ones excited about Gurevich's vision and his proven ability to execute on it. Eric Trump, who serves as a strategic board advisor to Metaplanet and who partook in a fireside chat with Gurevich during the afternoon's programming, spoke highly of Gurevich. Quote, Simon is one of the most honest people I've ever met in my entire life. You have a great leader in Simon and a wonderful product in Bitcoin, and I think that's a winning combination. Oh my God. I hate it when people talk like this. When you've got to tell a room full of people that the person you're pointing at is one of the most honest people you've ever met, I'm not saying that Gurevich isn't honest. I'm not going to libel myself at this point, but dude, really? Doesn't that send up like red flags? Oh, that guy's honest, man. You can trust him. It sends up a red flag for me. It's probably nothing, but whatever. Nakamoto CEO David Bailey, who invested in Metaplanet soon after it implemented the treasury strategy, praised Gurevich and the Metaplanet team, noting that investors across Japan are being forced to take notice of the company. Quote, Metaplanet has become too big to ignore, said Bailey. Bailey went on to say that he looks forward to the day that Gurevich is invited to meet with the Prime Minister of Japan, as well as the Emperor of the country, thanks to the work Gurevich has done in making Metaplanet a, quote, systemically important institution for Japan. The hyperbole is thick. That's nothing but pure hyperbole, ladies and gentlemen. Anyway, let's go back. Yes, I marked it. Good. Thank you. Okay, let's go back to this Class A versus Class B. Class A, safer, steadier. These are the preferreds that they're about to offer, and the product yields 5%. So you just hold it and get 5%. Okay, that's great. But Class B is riskier, but it will come, and here's the rub, come with the option to be converted into Metaplanet's common stock. Now, there's only 2 ways that this can actually happen. 1, Metaplanet already has stock that it is able to trade for these preferreds. If and when somebody executes the warrant and says, I want the common stock from Metaplanet, here's my preferred stock. Or Metaplanet has to print more common shares, which is a dilution event for existing shareholders. They're not saying which one they're going to do, and in my mind, that's an important detail because investors are getting tired of being diluted. Let me say it again. And this isn't just for Bitcoin treasury companies. It's not just for Bitcoin companies. This is for all equities, all Bitcoin treasury companies. People are tired of being diluted. And that includes sovereign citizens of sovereign nations around the world holding supposedly sovereign fiat money that just keeps getting printed into oblivion and thereby doing the exact same thing that happens if you're a shareholder and they print more common stock. The amount of your stock in value decreases. That's dilution. Everybody's tired of being diluted. And I'm seeing a whole bunch of people say, hey, man, Bitcoin's great, and don't seem to understand that they're just doing what sovereign nations do. They're just printing debt. Well, only a few of these companies, these Bitcoin treasury companies, will survive. So be very careful. And I'm not even saying, I don't know, I'm not ever going to get any of these companies. I might have exposure in one way or another because the companies, like we got a couple of family companies. They're very, very small, but they are invested. And I guarantee you somebody somewhere's got some kind of exposure to probably Strategy and BlackRock. So I guarantee I've got exposure to this, but only in passing and only because the company just buys, like some hedge fund stuff. There's nothing I can do about it. I would be voted down in the shareholders meeting if I were to say we need to exit all this crap. So I don't even try. But let's continue on with the strategy thread. And I'm talking about the company Strategy. Strategy's equity shift is not a retreat from Bitcoin, according to Strategy. Okay, fine. Will Canny is writing this one for CoinDesk as well. Strategy's recent share price weakness has drawn criticism from retail investors who accuse executive chairman Michael Saylor of undermining discipline by loosening a self-imposed rule against issuing equity when the company's premium to its Bitcoin holdings, or MNAV, falls below 2.5x. See, that's what people are pissed off right now about. He's made a change. Michael Saylor has made a change because he's loosened a rule that he set for himself. Let's find out more. That criticism, however, misreads the situation, benchmark analyst Mark Palmer said in a research report on Tuesday. The stock's underperformance has more to do with market dynamics, namely a compressing premium to its Bitcoin net asset value and broader volatility in crypto and macro markets than with capital mismanagement, Palmer wrote. By updating its guidance on August the 18th to allow tactical equity issuance, think printing shares, even below the 2.5x MNAV threshold, Strategy effectively restored flexibility, the analyst said. Rather than a capricious move, the change freed the company to keep buying Bitcoin during periods of weakness, maintaining its accumulation flywheel. This approach is consistent with the history of adapting its balance sheet, Palmer argued, whether paying down restrictive debt, refinancing with convertible bonds, or innovating with perpetual preferred stock issuance designed to supply permanent capital without refinancing risk. It's a lot of words to say: print debt, sell debt, get money, buy Bitcoin. It's like the steal underwear ? And profit business plan of the underwear gnomes. Anyway, that financial innovation has been one of Strategy's most overlooked strengths, according to Palmer. Its preferred stock program has created new Bitcoin-linked instruments attractive to hedge funds and volatility traders, validating the firm's strategy and expanding the investor base. Each successful placement underscores the appetite for Bitcoin-tied fixed income and cement the company's reputation as a credible issuer experimenting at the intersection of crypto and traditional markets. The company may soon face another milestone: potential inclusion in the S&P 500 index. If admitted, the stock could see billions in passive inflows and would join Coinbase and Block in embedding crypto exposure directly into the portfolios of mainstream equity investors. Palmer reiterated its buy rating of $705 per share of Strategy, calling Strategy the most liquid and direct vehicle for exposure to Bitcoin's upside without mining risk. That would be more than a double from the current share price of a mere $332. If you want to go buy Strategy, man, you knock yourself out. I'm staying away from all of this. I just want to hold Bitcoin because Bitcoin's delicious and it's golden. Just like Sunlight and glass from my friend GreatGhee at GreatGhee.com. Ghee is spelled Ghee. What is it? It's clarified butter, ladies and gentlemen. It's golden. It's got a nice toffee taste to it, and it's shelf stable because all of the protein and the rest of the water that you find normally in butter has been boiled away or baked out, and all you're left with is the golden goodness that is ghee, which is a staple ingredient in almost all Indian food dishes and a whole lot more. In fact, what is ghee? Ghee, or clarified butter, is made by simmering butter to remove water, milk solids, and other impurities, leaving behind a golden, lactose-free oil with a nutty flavor and high smoke point. In fact, you can get this stuff up to about 485 degrees Fahrenheit before it starts to smoke. When any oil or fat smokes, it's pretty much done for. You've really messed up. So don't go all the way to 485. Keep it at 450. Whatever you're going to cook at 450 is going to be just fine, I guarantee it. Unlike regular butter, ghee is shelf stable and versatile for cooking, baking, or even skincare. What is shelf stable? It means you don't have to refrigerate it. And after you open it, take some ghee out, use it in whatever you're going to use it for. You can put the lid back on and put it back on the shelf. It doesn't have to ever go in the refrigerator. That's what shelf stable is. And that's one of the great things about ghee. It's a way of preserving butter for long-term storage. That's why people do it. Go get your ghee at GreatGhee.com. That's GreatGhee.com. Again, it's GreatGhee.com, and make sure that you put BitcoinAnd, all one word, in the order comments section, because the Circle P, of which we are doing the segment of right now, is a value for value advertising model. If GreatGhee realizes that I made him a sale, then he gets to make the choice as to whether or not he pays me in some of those sweet, sweet Satoshis, and by how much he reimburses me for making a sale. If you have never tried GreatGhee's ghee, get on over to GreatGhee.com. That's GreatGhee.com. Use BitcoinAnd in the code box. No, you're not really going to get that much off, but hey, or anything off, but it's the way the value for value advertising model works. Let's go on, talk a little bit more about what's going on with strategy, because honestly, there's really not a whole lot of news going on. Hey, I do what I can for you guys. At least I'm not talking about Solana. From the block in James Hunt, Bitcoin is still on sale. Strategy buys another 4,048 Bitcoin for $450 million, bringing total holdings to 636,505 Bitcoin. Treasury company Strategy acquired an additional 4,048 Bitcoin for about $449.3 million at an average price of $110,981 per coin between August the 26th and September the 1st, according to an 8K filing. They now hold 636,505,000 BTC, worth $70 billion, at an average price of $73,765 per Bitcoin. He's still making out like bandits. Holy smokes. Wow. Okay. The latest acquisitions were made using proceeds from at the market sales of its, get ready, Class A common stock. Remember what we were just talking about? That they relaxed the rules? When Saylor says he's about to do something, you don't wait very long for Saylor to actually execute on it. Usually it's within 24 hours and on the outside somewhere within 48 to 72 hours that he actually executes. So they've diluted common stock shareholders yet one more time. But they also sold perpetual strike preferred stock, perpetual strife preferred stock, and perpetual stride preferred stock. Wow. So it's strike, strife, and stride. Interesting. Strategy sold 1.2 million common A shares for $425 million with 16 $0.31 billion remaining for issue and sale under the ATM program, the firm said. They also sold almost 200,000 Strike shares for $19 million, with $20.39 billion remaining. 237,000 Strife shares for $26.5 million, with $1.8 billion remaining, and 12,973 Stride shares for $1 million, with $4.17 billion remaining. That's how much stock they have in those little piles to issue later. Stride is a non-convertible with a 10% non-cumulative dividend. You spelled yield wrong. And the highest risk-reward profile. Strike is convertible with an 8% non-cumulative dividend, allowing for equity upside. And Strife is non-convertible with a 10% cumulative dividend, making it the most conservative. Okay, well, that's great. Strategy: Strike, Strife, and Stride perpetual preferred stocks, respective 21, 2.1, and 4.1 billion ATM programs are in addition to the firm's 42 plan, which targets a total capital raise of $84 billion in equity offerings and convertible notes for Bitcoin acquisitions through the year 2027. And that's upsized from its initial $42 billion under the 21 plan after the equity side was completely depleted. Saylor again hinted at the likelihood of another Bitcoin acquisition filing ahead of time, sharing an update on Strategy's BTC acquisition tracker on Sunday, stating Bitcoin is still on sale. Yeah, well, yeah, we kind of knew that. Honestly, they're just going to go, the rest of this story goes into the history of MicroStrategy, and do we need it? No, we're going to run numbers. Woo doggy. Oil, West Texas Intermediate is up almost 2.5 full points to $65.56. Brent North Sea up 1 1/3 to $69.09. Natural gas taking it downwards 1.3% to $2.95 per thousand cubic feet. Gasoline is up 3.4%. And Murban crude, the most expensive light sweet crude oil, I guess that there is up 1.25% to $72 a barrel. Yeehaw. Gold busting out, baby. 2.12% to the upside today, clocking in at 3,597 dimes. Wow. Silver is up 2.25. Platinum is up almost 3. Copper is up 0.8. Palladium up 2.4%. These are the exits alongside Bitcoin. Agriculture futures are 100% in the red today. Biggest loser is coffee, 3.78% to the downside. Live cattle is up 0.2%. Lean hogs up 0.5%. And feeder cattle are up 0.08%. This is some of the highest prices for cattle sales ever. I think it's actually the highest per animal, per pound, whatever, however you want. When a rancher takes, when you see a whole bunch of cattle going moo moo in those cattle trucks, they're not being taken out for a stroll around town. They're being taken to a kill facility, right? You can consider that the last destination. But before that, those cows come from something called a sale barn. And that's where me as a rancher, if I was a rancher, I would take my cattle. If I was unable to process that cattle myself so that I could make direct sales to my own customers, if I couldn't do that, I got to take them to a sale barn. The price that I'm getting for selling live cattle to a sale barn, which will then be taken to slaughter, is the highest ever. And yet, worldwide cattle, the herd size is at its lowest point. Some people, I've seen ranchers going, well, shit, yeah, I'm just going to go out and have myself a steak dinner because prices are high. Dude, nature abhors a vacuum. High prices on cattle and the lowest herd size on record is not a good mix. It is not a good mix. If you can, please, for the love of God, find your local rancher and see if you can pony up the money to buy meat directly from that rancher. We need ranchers to stay in business. I would say that we need more ranchers, but at this point, it's so bad. I'm begging people to just keep the ranchers that are still alive. We don't need to lose any more. I would love it if we gained some ranchers, but right now, man, it's not a whole lot of that happening. What is happening, ranch after ranch after ranch are being sold off. Ranching families that have been in it for decades, if not centuries, leaving ranching. It's sad and it needs to stop. Find your local rancher, shake your rancher's hand. If you've never been to your local farmer's market, go. Because chances are good if you're going to find a local rancher, it's going to be there. Ask the rancher to tell you how he does it. I guarantee the rancher will be more than happy, him or her, to let you know how they raise their animals, what they think about ranching, what they think about beef. They're dying to tell other people about their lives. I guarantee it. But we're not out of the woods yet. All of the indices, equities are in the red. Dow down 1.16%, S&P down 1.5%, NASDAQ down 1.6%, and the S&P Mini is down 1.16%. Whoop-de-doody day. And we are at $110,580 per coin. That is still a $2.2 trillion market cap. But we can only get 31.2 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,915,091.81 of, and average fees per block are relatively normal. I'm used to seeing 0.03 BTC taken in fees on a per block basis. There seem to be about 32 blocks carrying 91,000 unconfirmed transactions waiting to clear at high priority rates of 1 Satoshi per VByte. Low priorities are also 1 Satoshi per VByte. Holy smokes, 1 zettahash, ladies and gentlemen. Mining hash rate has hit 1 zettahash. That would be 1,000 exahashes. 1,000 exahashes. We've tripped over into zettahash territory yet one more time. Can we stay there? I don't know. From Lightning in the Mesh, which was Friday's episode of BitcoinAnd, I got Psyduck with 751 sat says Psyduck. Paul Cernine with 500 says, excellent episode number 3 on Cathedral. Tremendously enjoyed listening to it, and I have the impression you explained it so well that I understood quite a bit of it, which is no mean feat considering I don't have any agricultural background. Kudos to your work. Looking forward to the next part. Paul, part 4 has dropped. Part 4 has dropped. You got it's actually the episode right before Wrenched and right after Inside Costa Rica. So Paul, if you're listening, part 4 of Cathedral is called Life Raft, and it describes a subsystem of the grazing part of the Cathedral system. I thank you for your kind words. I appreciate it. If that's what I aim to do. That's what I love being able to take agricultural concepts and get them into the hands of people that don't have any experience with it. It's important that we keep it's not just because it's heritage, it's because it's food production. If you want your meat coming out of a stainless steel vat somewhere in Van Nuys, California, then by all means, don't care about your farmer or your rancher. Otherwise, the people that make your food, that grow your food in dirt, in soil, go shake their hands. Go find them, shake their hands. Pies with 420, thank you, sir, no thank you. God's Death 237, thank you, sir, no thank you. Justifer with 5,000 sats, holy smokes, says, great coverage, always appreciate the lightning topics. I wish I could just find more. Just find more. Lightning and nostr stuff. Speaking of, you guys can help me produce the show. If you guys find a story or like a thread somewhere, even if it's Twitter, I don't care, nostr, whatever. If it's something interesting about a development in nostr that has a good explanation behind it, then send it to me. Just I don't care if you give me even if it's a Twitter URL. I don't care. Send it to me on nostr. Send it to me on nostr, man. Or better yet, boost the show, because this is podcasting 2.0. This is the way you support the show. You can stream me Satoshis. You can give me giant giant, like 5,000 Satoshi boostograms. And in those, you can say, hey, here's something I saw that's coming on nostr. Will you please cover it on the show? And I will try. You have a say in what goes on in this show too, ladies and gentlemen. That's the weather report. Welcome to part 2 of the news that you can use: quantum threats or something more. El Salvador is splitting up its Bitcoin. Oh my God, it's a divorce. We're all going to die. Decrypt.co and Matt DeSalvo is going to tell us what's going on. And honestly, you know what I'm happy about? That I literally heard nothing about this either on Twitter or on nostr for the entirety of Memorial Day or Labor Day weekend. This is the first I've heard about it, and this article was written yesterday, and I heard nothing about it. I heard nothing about it this morning, honestly. And for it to go 24 hours without people going, oh, well, there it is. Bukele is buckled. I honestly take that as good news that people didn't immediately freak out. So let's find out what's going on with El Salvador's government. It seems that they have moved its Bitcoin stash to new addresses just months after telling the IMF that it wouldn't buy any more of the cryptocurrency. Well, we promise. Promise, man. The country's national Bitcoin office said on X Friday that it had moved its funds from a single Bitcoin address into new addresses as part of a strategic initiative to enhance the security of long-term custody of the National Strategic Bitcoin Reserve. El Salvador's Bitcoin office noted the security threat posed by the advent of quantum computing as the primary motivation for moving its coins. Quote, quantum computers have the theoretical capability to break public-private key cryptography using Shor's algorithm, the office posted on X. Quote, when a Bitcoin transaction is signed and broadcast, the public key becomes visible on the blockchain, potentially exposing the address to quantum attacks that could discover private keys and redirect funds before the transaction confirms. El Salvador's President Nayib Bukele in 2022 said his government would buy 1 Bitcoin per day for its national reserve. The country's coffers currently hold 6,286 Bitcoin, according to Arkham Intelligence data. The office noted over the weekend that it had previously used just one address for transparency, but would now use multiple addresses as a way of enhancing security. Data from Arkham Intelligence shows that the country last bought 1 Bitcoin on Sunday. Quote, the reserve is being redistributed into multiple addresses, each holding up to 500 BTC. Limiting funds in each address reduces exposure to quantum threats because an unused Bitcoin address with hashed public keys remains protected. Wait, what? Hold on. Limiting funds in each address reduces exposure to quantum threats because an unused Bitcoin address with hashed public keys remains protected. No. Not really. Not really. I can go scrape mempool right now. I've got my own instance of mempool on my Bitcoin node. I can go to Arkham Intelligence. I can find these transactions and I can go back and I know where all these coins, all I got to do is have the original address and I can track all of this and I will know those addresses. Those addresses are public. The minute you set Bitcoin to a public address, even if you just spun it up, you'll be able to see that address in the mempools. Oh my God. Okay. I'm going to calm down here. That's wrong. What the Bitcoin office just said, that's incorrect. Be aware that they either don't know what they're talking about or they do and they think that you won't catch it. But what they just said is 100% incorrect. Those public addresses are indeed public, and they are just as vulnerable as any other public address under the auspices of which they claim, that is, being quantum computing, which I'm not worried about right now, and you shouldn't be either. But, quote, Once funds are spent from an address, its public keys are revealed and vulnerable. By splitting funds into smaller amounts, the impact of a potential quantum attack is minimized. This is wrong. The Salvadoran government now has a public dashboard showing its transactions and addresses. Crypto privacy experts advise against using one address to hold Bitcoin and other digital coins and tokens. El Salvador's announcement comes after the country said in July that it promised not to continue to accumulate Bitcoin according to the IMF. Now, we've heard that 4 times already. And each time they bought Bitcoin. Oh, well. The body in May started dispersing the first part of the loan to help the IMF loan, to help the Salvadoran economy grow on the condition that El Salvador would change some of its Bitcoin policies. A July statement from the IMF said that authorities continue to comply with commitments not to voluntarily accumulate Bitcoin. In late July, an IMF spokesperson told Inner City Press that El Salvador was not, in fact, purchasing Bitcoin on a weekly basis, but was instead simply moving funds around from internal wallets. Quote, the total amount of Bitcoin held across government-owned wallets remains unchanged. Hold on, it says remains unchained. Okay, the total amount of Bitcoin held across government-owned wallets remains unchained. I think they want to say unchanged, but whatever. This is according to the spokesperson. The Salvadoran government's press office confirmed to Decrypt that it would continue to indeed buy 1 BTC per day, and the IMF did not immediately respond to Decrypt's request for comment. El Salvador in 2021 made Bitcoin legal tender. Yes, we know, we don't need a history lesson. So we are still at this impasse where the IMF is coming out and publicly saying that El Salvador has promised not to buy any more Bitcoin. And then El Salvador comes out with their own press release saying that they intend to buy more Bitcoin. And then El Salvador actually purchases more Bitcoin, or at least as far as the information that we know tells us, like this wallet that's associated with El Salvador from Arkham Intelligence, or the one that Arkham Intelligence is tracking, it goes up every day by 1 Bitcoin, just like they said that they would. The IMF never, after, when people contact the IMF for confirmation as to what El Salvador said, the IMF basically shuts its mouth and doesn't ever make a statement until they finally do weeks later, saying that, again, El Salvador's promised not to buy any more Bitcoin, and the cycle starts and goes over again. We have no idea what's going on here. But if the IMF is so incensed about all this, then pull the loan. Tell El Salvador to go pound sand. I mean, if they're not complying with you, pull the loan. It would be better for El Salvador if they didn't have an IMF loan. It'd be better for everybody if they stopped cozying up to the IMF. It's just that way. Okay. Hong Kong. The University of Hong Kong Business School, so just the business school, I guess, is going to accept Bitcoin for tuition. This is Alex Larry for Bitcoin News. University of Hong Kong's business school is exploring Bitcoin plans. According to the South China Morning Post, the top-ranked business school in Asia is evaluating plans to accept Bitcoin and other digital assets for tuition fees and donations. Dean Professor Hong Bin Kai confirmed the move at the CryptoFi forum last week. Quote, all the technical details have been sorted out. We will take Bitcoin and digital currencies for tuition fees and donations in the future, he told the audience. No timeline has been set. Okay, so we're going to. But it's a sign that Hong Kong is getting serious about becoming a global hub for virtual assets. The move comes as Hong Kong tightens its regulatory framework for digital finance. On August the 1st, 2025, the city introduced the Stablecoins Ordinance. Are you going to get back to the Hong Kong? I don't care about the city. Blah, 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 blah. A University of Hong Kong spokesperson told South China Morning Post, HKU Business School is dedicated to creating a secure and sustainable environment for advancing research, development, regulation, and practical adoption of digital currencies in collaboration with our partners. Yes, you always need to talk about the stakeholders. Many believe one of the biggest risks with Bitcoin is its price volatility. A coin can gain or lose value in days. Professor Kai said, quote, if we lose money, We will be losing the money of the faculty. It's okay. We can take care of it, but at least let us give it a try. You know, that's probably one of the more honest statements that I've ever heard out of an institution like this, honestly. Kind of cool. Local legislator Johnny Ng suggested the simplest way to reduce risk is to convert Bitcoin payments into Hong Kong dollars immediately after they are received. He said KYC checks will be crucial to prevent illegal activity. I'm going to launder my money by donating to the Hong Kong Business School. I'm going to launder my money by getting a degree from the Hong Kong Business School. People are really weird about this. Quote, the price of Bitcoin is volatile, but you can fix the risk by converting it to local currency. Otherwise, you could treat it as an investment product, Ng said. Quote, but it is important for institutions to do the KYC process to ensure the digital wallet is not linked to any illegal activities or funds from unknown origins. Oh, good luck. How many hops in the chain are you willing to say, beyond this point, we don't care? Because that's going to be an issue. But last week, Binance founder Changpeng Zhao attended HKU Forum and praised Hong Kong's approach. And he said before that Hong Kong can rival the US and the UAE as a virtual asset hub if the government acts fast and decisively. Other industry voices also see HKU's move as part of a bigger trend. Universities worldwide are starting to experiment with Bitcoin. For example, in February, the University of Austin announced the creation of a $5 million dedicated Bitcoin fund. Well, that's easy because the University of Austin is basically a whole bunch of Bitcoiners that got together and said, higher education is on the ropes. Let's do it ourselves. So that's not surprising, guys. University of Austin taking Bitcoin is not surprising. HKU, however, will be the first to accept Bitcoin directly for tuition payments. In a similar move, Le Monde School in Helensburgh, Scotland, made history in April by becoming the first school in the UK to accept Bitcoin as payment for tuition fees. Hong Kong is going a different path from mainland China, which banned most digital asset activities in 2021. Instead, the city is promoting a regulated but open environment. 11 digital asset trading platforms are already licensed under SFC, and the government has proposed tax breaks for digital asset investments. So, yay! Maybe Bitcoin can save higher education. Because higher education's kind of on the ropes right now, man, depending on which school that you're talking about, like the smaller universities, especially in the United States, having some pretty difficult times. And you will find out over the next 10 to 15 years who was really serious about their endowment and their investments and making sure that their school had a future financially, or the ones that spent all of their money on, an athletics program that really doesn't deliver. Because by God, there's a lot of them. A lot more than I care to think about. Texas Tech will survive. Harvard will survive. University of Texas will survive. A&M will survive. And I'm talking about Texas A&M. They'll survive. Schools like that, Princeton, Oxford over in the UK. Brown will probably survive. University of Chicago is a spook school, so it's definitely going to survive. CIA will bankroll that thing. Georgetown University will definitely survive. Again, another spook school, but hey, who's counting? It's bad. The enrollment cliff is here. And I won't get into what the enrollment cliff is, but enrollment is down. And most of the universities in the United States have been scouring demographic data for the last few decades, and they knew it was coming. And there were schools that either acted on that information, like Texas Tech, and really ramped up their donation schedule and making sure that, alumni that had made it good in the world were prepared to unfold their wallets. They had a huge thing called the Horizon campaign. It was supposed to get in and this was in the late 90s, by the way. It was supposed to take in $250 million. They blew past that in a month. And then the chancellor at the time had to take it to 500 million. They blew past that in 2 more months. So he finally said, okay, 750 million. They blew past that. And then he said, okay, fine. One $1.25 billion. And that was enough to actually have a real, honest to God, lengthy campaign to reach that. And then they reached it and went past it, and tech is going to be fine. University of Texas repatriated all of their gold, their physical gold. They sent trucks to New York City, and they got their gold and they trucked it back, and they are storing it in Austin, Texas, or at least that's what we think. We know the gold has come back to Texas. Whether or not it's in Austin, is it on the campus of UT? I don't know. But we do know all of their gold UT repatriated like a decade ago. There are some schools that are going to be just fine. I think you're going to I think you're going to see in the next 10 years, 25% of full-blown universities, not colleges, full-blown universities close their doors permanently. It's going to be sad. But you know what's really sad? People that have too much time on their hands and are honestly way too angry for their own good. Gavin Newsome, governor of California, wants to launch a meme coin just to troll Trump. Gavin, do you literally not have anything better to do with not only your time, but your team's time? Because somebody's got to roll this up. Matt DeSalvo, decrypt.co. California Governor Gavin Newsom said that he will release his own meme coin in the Democratic politician's latest dig at Donald Trump. Newsom said Friday on The Pivot with Kara Swisher and Scott Galloway podcast that he'd step up his campaign to mock President Trump by releasing, quote, Trump corruption coin. The California governor joked that the upcoming cryptocurrency would do better than the digital token President Trump released in January, the Solana-based cryptocurrency that trades as official Trump. Quote, we're about to put a meme coin out, and you know what, Donald Trump? We'll see how well your coin does versus our coin. Oh, man, it's the bumper sticker. My coin can beat up your coin. My coin's an honor student at such and such elementary. These are grown men and women. He added that Trump corruption coin would be the best name for the asset. Turning serious, Newsom then said, this is one of the great grifters of our time, referring to President Trump. This is just jaw-dropping, end quote. Newsom had been mocking the U.S. president by posting on X in Trump's signature style and copying his language and famous phrases. President Trump, ahead of his January inauguration, released Official Trump, or Trump, a meme coin that runs on Solana. The token shot up in value before quickly crashing, as meme coins tend to do, and Democrats have since criticized the commander-in-chief for cashing in on this and various other crypto ventures. Trump is the 77th biggest cryptocurrency with a market cap of nearly $1.7 billion, and it was recently trading for $8.42 a coin, according to CoinGecko, well below the all-time high of, wait for it, $73.50. God, my God almighty. Meme coins are cryptocurrencies based on internet culture, often celebrities or online jokes. They are known for their extreme volatility and relatively short shelf lives. Unlike GreatGhee, get your shelf-stable butter at GreatGhee.com. President Trump campaigned to help the cryptocurrency industry, promising to ease regulations as president, create a national strategic Bitcoin reserve, and going so far as to say all future Bitcoin would be mined by United States companies. He received significant backing from the industry during the campaign, but opposition politicians have said the president is lining his own pockets with his crypto ventures and have criticized Trump for his apparent conflicts of interest. Well, hell, even I've talked about conflicts of interest. Yes, it's a conflict of interest. That never stopped Nancy Pelosi, but on Monday, a crypto project backed by President Trump, his sons, and the White House's special envoy to the Middle East, Steve Witkoff, debuted its token on major exchanges. WLFI which is the governance token of Ethereum-based World Liberty Financial, gave the project a valuation of over $26 billion following its debut on exchanges like Coinbase and Kraken. The Trump family owns a significant portion of the WLFI token supply, their share valued today at nearly $6 billion. Yeah, I scanned another news article that suggested that they've made more money on the World Liberty token deal than all of their family's real estate deals that has ever been done. Now, I haven't verified that. I don't know. I don't care about it that much. But if it's true, that's freaking hilarious. But it's also quite sad that there's that many rubes in the world that think that a Trump coin or a Gavin Newsom coin has any real and long-term tactical value. They don't. And it's not just because it'd be Gavin Newsom and Trump. All of these meme coins are scum. They're scum of the earth. Altcoins are just terrible. The ICO craze, the altcoin craze, the NFTs and the ordinals and the ordinances and all of it, all of that part of the ecosystem is just pure grift. It's just a con game. It's an affinity scam, and everybody needs to stop buying into this. What do you think you're going to hurt Trump? If you're listening to me in California and you freaking can't stand Orange Man, do you think that buying Gavin Newsom's token is going to do anything that swings the world in your favor and hurts Orange Man? If you think that the answer is yes, I got bridges for you, man. I got them for sale everywhere there's a desert. Everywhere there's a dry lake. I got bridges for you, man. Buy one, and I'll see you on the other side. This has been BitcoinAnd, and I'm your host, David Bennett. I hope you enjoyed today's episode, and hope to see you again real soon. Have a great day.